Click the bell icon to get latest videos from Ekeeda.
Hello friends, today we'll learn what is ABC analysis for inventory control. Let us understand the concept of ABC analysis. ABC classification or ABC analysis is a system of inventory control. Every management is interested to have proper inventory control so that there should not be any losses happening to the inventories, and that will be resulting into consequent profit or loss for the whole business. For that purpose, management is focusing more on handling the materials very properly. That comes under stock management or inventory management. Goods which are kept in warehouse, whether it is raw material or finished goods, those are the valuable assets of business. So those are required to be properly protected and properly handled. For that purpose, management is required to take various steps. The basic concept is every stock requires some investment. Some amount of capital gets blocked in the stock, and that capital is costly because company is required to pay returns on every capital, and such valuable capital is getting blocked in the stock. So there is need to handle the stock more carefully. There is need to take care of investment which is made in the stock by the company. For that purpose, ABC classification or ABC analysis is a method used. System of inventory control based on investment in inventories. We buy variety of items as inventory. Now each item may not be costly and each item may not be cheap. There is variety of amounts are paid to maintain a stock or to produce a stock. So based on the amount blocked, we can have classification of all the goods, all the inventories. So accordingly, under this method, all inventories are classified into three groups, that is A category, B category and C category. Now here basis of classification is how much investment required for that particular stock and what is the percentage or proportion of that stock to the total stock. Now in A category, we will have about 10% of total items. 10% of total items, the big items which require investment in inventories, which is 70%. That means those are small in numbers but they have high value and therefore they are put in A category. The management is required to take more attention to this A category of product. The management is required to take more care of this particular goods or stock because they are putting around 70% of inventory investment in this particular category. Therefore, for this particular category, the management prepares a budget so that there will be budgetary control. Based on some standard cost, the company decides about the budget, the amount to be spent, so that there can be proper monitoring of the amount which is spent on these stocks. Next, there will be fixing of levels. Company will try to maintain proper level of such stock by determining minimum level, determining maximum level, determining economic order quantity. There will be value analysis. Such steps are used by the management to have strict control on A category of goods. B category means about 20% of total items and investment required is about also 20%. So they are less in numbers as well as investment is also less. These are ordered by the management by taking review from time to time. How much is the requirement? Accordingly, orders are placed. Third is C category, where you will find the maximum stock in proportion of total stock. It is about 70% of total items. As far as investment is considered, they are cheap in value, that is about 10% of total investment is made by management in C category of goods. Now here their number is more, they are around 70%, but the value involved is less. Therefore management may order such stock 6 monthly basis or yearly basis, because here involvement of amount is less, there is lesser risk of loss of amount in case of C category. This is the classification is done, and accordingly management manages A, B and C category of stocks, particularly ordering the goods, maintaining the goods, taking care of the goods, depends upon the stock it falls on which category. This method has got some advantages. First, it ensures uninterrupted production. As we have classified items in ABC groups, management will be more focusing on type A category of goods to ensure that those should be obtained at a reasonable price, right price. B and C will be kept in abundance as required by the production department, so it ensures uninterrupted production. Secondly, cost of purchase, cost of receipt, cost of storage gets what? Minimized. Management decides proper purchase policy relating to 3 categories of stock, so it reduces the overall cost of purchase, receipt and storage. Third, this method is time saving. This is called as management by exception, as management will be more focusing on A category of goods. They will devoting maximum time so that valuable stock will be purchased at right price and it will be maintained properly. Therefore, it is also saving the time of the management. They are not required to involve in B and C category of stock. Routine purchase by clerical staff. As the categories of the goods are determined, management can hand over the responsibility to buy stock relating to B or C category to the lower staff or clerical staff. They can handle the routine purchases. These are the advantages of ABC classification or ABC analysis. Let us see one small question to understand the concept more elaborately. This is the question based on ABC analysis. A factory uses 4,000 varieties of inventories. In terms of inventory holding and inventory usage, the following information is compiled, collected. Number of varieties of inventories, total number 3,875. Its percentage is 96.875 percentage. Percentage of value of inventory holding 20%. Percentage of inventory usage in end product 5%. Second, 110 items having percentage of 2.750, percentage of value of inventory holding 30%, and in final product is 10%. Third is 15 number of variety of stocks, percentage 0.375, percentage of value of inventory holding is 50%, and value of inventory usage is 85 in final product. Classify the items of inventory as per ABC analysis with reasons. Now here we can rank these varieties of inventories based on first investment. Based on investment first, second and third. Now here we are having percentage value of inventory holding, that is what? Average. Now here you can see that 15 numbers of products having investment of 50%. So as per rank, it will have first rank. Then we have 30, it will have second rank. And then this will have 20, that is third rank. then percentage of use, accordingly this can be A category, B category, and this will be C category. Here 3875, this is the maximum number, so it will be put in C category. $110 numbers, B category, and finally 15 will be in A category. So this is how basically we can have classification of items based on their numbers and amount of investment. In this case 15 number of varieties, they are having very less proportion 0.375, but having maximum investment 50%, and in final product there is use of 85%. So it will be put in A category, 15 number of varieties of inventory items, 0.375 of total numbers, 50% of total value of inventory holding, investment, highest consumption of about 85% in final product. Therefore they are put into A category. In category B, we'll have 110 number of varieties of inventory items. They are having percentage 2.750, investment is around 30%, and in final product their contribution is 10%. Category B, it is having 10% consumption in final product, so that will be 110 number of varieties of inventory items. Category C, 3875 number of varieties of inventories. $3,875 number of varieties of inventories will be put in category C, as they are having 96.875, that means almost 97% of total number. Secondly, amount of investment is around 20% of total inventory investment. And third, it is 5% of consumption in final product. Thus we have understood the concept of ABC analysis, that is a method of inventory control used by manufacturers. All the variety of products which are purchased by the management as an input material is classified into three categories: A, B, and C. Each category is considered based on investment in that particular type of products which is purchased by the management, and accordingly proper purchase policies, storage policies are adopted by the management to keep minimum cost control, values, etc. Thanks for watching this video. Stay in tune with Ekeeda and subscribe to our channel Ekeeda. Thank you.